I'm Glenn Hanson, the President and CEO of BPA Worldwide, and welcome to today's webinar on reporting on your sustainability initiatives within the GRI framework. There are 4 topics that we'll cover today: a basic introduction about UFI, a little bit about the GRI G4, that's version 4, and then we'll take you through a template that UFI's created to help you get through the GRI reporting process, and then conclusions and some contact information. Joining me today will be Karl Pfalgraf, our Vice President of Sustainability Services at iComply, which is a division of BPA Worldwide. During our session today, if you have questions, please provide those. I know Christian is monitoring today's class, and so if we're not able to answer your questions during our presentation, he'll certainly be able to do that offline after our meeting. To take you through some basic information now on the GRI and the UFI, let's scroll down. Now, I know many of you who are on this call today know UFI, or you wouldn't be here, so I'll bear with me while I just give you some basic stats on the organization. You might not know that it has almost 650 members in 85 countries, but 2 important points today are the number of venues and venues that are also organizers, which is just over 200. And that's important because they are a critical part of the supply chain, which is a big part of how the sustainability issue is being driven in the marketplace. And then in addition, we have 333 that are organizers only, which now if you look at the total number of organizers, that's nearly 460. And those organizers are a key part in driving the sustainability issue down through the entire events industry supply chain. UFI in 2008 established an overall vision and mission regarding sustainability, certainly to achieve a high level of member awareness and commitment to promote social and environmental responsibility within the exhibition industry, and to serve our members by promoting, encouraging, supporting sustainability within the exhibition industry, thus becoming a reference point for best practice tools, standards, and learning. And the beauty about today's presentation, we've got much to show you, but the beauty is that with UFI's Educational Center, you can always come back and relearn at your own pace. And we also have wonderful tools on the UFI site, which you'll see here through the hyperlink. We did a survey, not BPA, but UFI did a survey towards the end of the year last year, and we shared it at our sustainability seminar back in December in Switzerland. In that survey, we found that 50% of the respondents were aware of ISO 20121, and this is a management system for sustainable events. Another 40% were aware of the GRI and what's referred to as the EOSS, or the Exhibition or Event Organizer Sector Supplement, which are items that GRI is suggesting you report on if you're in the events business. Another 30% in that group were aware of the Global Compact, and yet a lesser amount, about 27%, were aware of ASTM. Now, the ISO is traditionally seen perhaps as European-centric, and ASTM is seen more as North American-centric. With ISO, it's more about a philosophy and a management system for the organization, whereas ASTM is more of a certification process where the supply chain will sort of tick the box as to how they are performing in the area of sustainability. Why GRI reporting? Well, there are benefits, both internal and external. On the internal side, it helps with your vision and your strategy. I mean, there's nothing like having a plan. And so with a GRI report, it helps you identify your strengths and your weaknesses, and then you can set about a plan for continuous process improvement. We have found here with our own CSR initiatives that it does motivate our staff. And even today, with our recruiting efforts, we find that many of our staff are curious as to where BPA sits with respect to its own social responsibility and sustainability. And we also see that it gives a competitive advantage and helps you become a market leader. And if you're interested in investors, we also know that many investors are now looking for environmentally sustainable and socially responsible organizations in which to invest. On the external side, certainly it helps your reputation, your trust, and your respect. It's a big part of this initiative to improve transparency in your sustainability reporting and your engagement with your stakeholders, which are not your shareholders only. It demonstrates your commitment to sustainability and enables comparability and benchmarking. And I would add to that on the, it produces profits. I think it produces profits in two ways. One, in helping you contain costs, and the second, perhaps, in helping you for the time being generate more revenue, because it is a unique selling proposition that your organization has issued a GRI report and demonstrates its commitment to the industry. There are some challenges with reporting following GRI. It must have a commitment from all staff levels, certainly from the C-suite. I think without that, you'll have a difficult time producing the information that you need to produce. It's a challenge to produce a picture of the real performance of the organization by communicating negative results as well as the positive results. The CSR report is not only a marketing tool, it is also about continuous process improvement. And GRI is very keen on your properly engaging your key stakeholders to find out what the material issues are that you should be addressing in your GRI report. It helps you establish realistic goals and targets and preparing your organization to achieve those. There's a challenge sometimes in collecting, organizing, and analyzing the necessary information, and then managing expectations around your final report, and producing a clear document that meets the reader's different needs after a difficult process of collecting from a lot of different areas. However, we have taken the initiative, meaning UFI, working with Positive Impact and now with iComply at BPA, to analyze the GRI indicators and the sector supplement indicators and design a piece that helps you, a tool that will help you complete your report with the areas that we feel are most important for the exhibition industry. And so to address a bit more about GRI, I'm going to turn it over now to Karl Pfalgraf, as I said, our Vice President of Sustainability Services here at BPA Worldwide. Karl?
Hello, everyone. Just a word about the presentation here. This is a type of presentation where the people listening in, you have to drive the slideshow yourself. So I'm going to go down the slideshow myself here and make sure we're all in the same slide deck. There are 3 files, and the first one we're going through is part 1. I will tell you where I am in part 1. I'll tell you when I switch to part 2 so you can get the documents up as well as I can. So what I'm going to do first is give you a little bit of background on GRI. GRI stands for the Global Reporting Initiative. And what you really need to know about GRI, it's really the only recognized international standard for sustainability that has really gotten widespread traction. This is the standard that organizations use to report their economic, environmental, and social responsibility issues. So that's what you need to know about GRI. All right, now I'm going to go down to the next slide. The next slide talks about GRI sector specific. Now when GRI developed the framework, they realized that a one-size-fits-all approach wouldn't work. So what they also did is develop separate frameworks for specific industries. And you can see on the slide here a number of industries, utilities, financial service, and the like, have a sector supplement. GRI also developed a special supplement for our industry, the Event Organizer Supplement, which Glenn mentioned a few minutes ago, in January 2012. So for those of us in this industry, this is the document that we're going to be looking at as well. All right, moving down to the next slide, current status of GRI-based reporting worldwide. What this slide shows you is really the dramatic uptake in GRI since it was launched back in the late 1990s. And you can see here that literally 95%, literally every one of the global 250 largest companies issue sustainability reports, and 80% of them use GRI. So if you are issuing a sustainability report, what typically happens is maybe in the first year you just issue a sustainability report, then you look around and you see what other companies are doing, and you quickly find out that GRI is what companies are using. And 2-3 years down the road, companies typically make the switch over to GRI because essentially everyone else is reporting to GRI. Moving down to the next slide, GRI Principles. Of these principles on this slide here, I would say that the most important ones for you to take away from this, under content, materiality, and stakeholder inclusiveness. Materiality is the notion that an organization must report on its most significant economic, environmental, and social aspects. Doesn't mean you report on everything, it means you focus on what's really important. So materiality is critical, and actually it's the focus of this latest version of GRI, which I'm going to take you through in more detail a little bit later, called G4. The next principle is stakeholder inclusiveness. If you think about materiality and trying to understand what your most significant issues are, stakeholder inclusiveness is the idea that you're not going to be able to determine what is truly material to your organization unless you've engaged with your stakeholders. As Glenn mentioned earlier, it's not just your shareholders, it's this broader understanding of who your stakeholders are: employees, customers, suppliers. It could be local community, the media, government officials. So it's this broader notion of who your stakeholders are. So those two elements are really critical to GRI. And I would also look to the right here on the quality part of the slide, and you see balance. And this is one that we don't see as often as we would like to see in reports. Companies tend to sugarcoat their reports and only put the good stuff in. And that's not what you should be doing. The concept of balance means that you need to show both the good and the bad, because if you only show the good, it really undermines the credibility of your report. So to the extent that you're trying to put a good face on things and you only put a good face on things, it really undermines the whole message. So it's not really a good idea to do that. Okay, moving down to the next slide. GRI G4 focus on materiality. This is the point I made just a moment ago. This is the fourth version of GRI. The previous version, 3.1, had gotten to the point where organizations were just reporting for the sake of reporting, for ticking the box on every possible thing that they could report. And so G4 is really kind of a return to basics for GRI. It's saying, let's get people to report on only the things that are truly substantive, that are significant impacts. So when you think about G4 and you think about your reporting, think about, all right, what I have to do here is figure out what my most significant issues are. And of course, as I mentioned earlier, you can't determine what those issues are unless you are inclusive, unless you've truly engaged with your stakeholders. So what GRI is looking for in the report is the issues that you've selected. Why did you choose them? Why are those issues important? How are you managing those issues? And how effective has been the approach? So think about that as really the overarching concept of what you should be doing when you think about doing a sustainability report. Moving down to the next slide, the one that says GRI equals 34 plus 15 plus 8. GRI can be very complicated. There are over 100 and close to 150 separate indicators that GRI has compiled. And so it's very daunting for a first-time company, a reporting company, to look at that, and you just can get blown away with that. So what UFI has tried to do is come up with a simple way to get your arms around GRI. And so this simple notion here of 34, 15, and 8. 34 means there are 34 what's called general standard disclosures. This is basic information about the company. And so what UFI is saying is, the very least, organizations should report on these 34 general standard disclosures, which is basic information about the company. Then you go to the 15. 15 is 15 that's called specific standard disclosures, and they're really KPIs, they're metrics. UFI has selected those 15, we'll talk about those in a moment. And finally 8, disclosures on management approach. What GRI is looking for in its report is for the organization to disclose how they are managing these sustainability issues. So 34, 15, and 8 was a way to break down this very complicated, seemingly complicated GRI into something you get your heads around. We'll go into this in a little bit more detail later. General standard disclosures, it's kind of the name, rank, and serial information about your company. And it's the type of thing that even if you're not doing a GRI report, you probably have a lot of this information at your fingertips. If you're doing just a financial report, other types of information, it's profile information. It tells you, the stakeholder, the reader of the report, a little bit about who you are, what you're wrestling with when it comes to sustainability. Those are the general standard disclosures. Okay, I'm moving down a little bit. I'm coming to the specific standard disclosures. And as I mentioned, these are the key performance indicators, they're metrics. And they're organized around categories. And you see those categories of environmental, society, labor practices, and the like. So think about the world of sustainability and think about the various issues. And what GRI has done is organize those into various categories and subcategories. And every one of those subcategories has specific key performance indicators. So that's part of what your reporting is going to do. It's going to show the reader what those specific areas are that you've chosen to report on and what your metrics, what your performance is. Moving down to the next slide, disclosures on management approach. What GRI is looking for is you want to tell a story. You want to tell the reader how you are managing your sustainability impacts. And one way to do that is around these categories that you see there, these 7 or 8 major categories. I'll get into that a little bit more later. Disclosure on a management approach. What GRI is looking for here is for you to tell the reader why this issue is important. Of all of the issues out there you could have selected in sustainability, why is this particular issue important? How are you managing that issue and how effective are you? That's really what GRI is looking for in your report. Event organizer sector supplement. As I mentioned, GRI realizes that this one-size-fits-all approach wouldn't work, so for many industries they developed specific disclosures, and so for the event industry they've come up with, and you'll see it on these 2 slides, 13 specific disclosures that they believe that most organizations in our industry should be able to report on. And you can read these as well as I can, but if you go down them you'll see that all these things are really specific to the event industry. And these are the issues that we have. They're not the same issues that if you're a bank or an insurance company or a mining company that you'd be dealing with. So when we sit down to do a report, you're really looking at the general framework that GRI has developed, plus this special sector supplement for the event industry. All right, this slide is kind of an interesting slide here. This gets into why bother to report in the first place. If you're a public company, what's interesting, this is a slide from the Bloomberg terminal, this shows you that companies that issue sustainability reports using GRI outperform those who don't. The next slide shows that companies that have their report assured by a third party tend to outperform even more. Part of the reason for this is that organizations that embrace sustainability, embrace reporting, and have a third party come in to check tend to be better managed companies. So it's not surprising that companies that go to this extent outperform those who don't. Why do companies go to the expense and the time of having a third party come in and check the report? Well, first of all, you can see here what actually is involved in having someone come in and do this. Most assurance focuses on determining whether the issues that you're reporting on are truly material. And that's the top issue in this list that you see on the slide. So think about when you have a third party come in, the third party, the main task of the third party is to look at your report and say, has this organization truly reported on its material sustainability issues? That's one element. The other element of assurance is checking the numbers, making sure the numbers are right. And so there are 2 approaches here. One is an approach that focuses more on making sure the report is material, which is getting the right data, versus getting the data right, which is checking the numbers. So it's not either or. There's these both elements that are involved in assurance. The reason why companies do this is they believe that there's a value in having a third party come in and check to see what they're doing. That outside scrutiny helps them raise their game. It also finds that a lot of these surveys or rankings that are out there in the investment community, they give higher weight to organizations that have had their report checked by a third party. So that's also one of the reasons driving why companies have turned to third parties to check their report. Now this, I'm going to kind of close to this kind of the first part of this general background on GRI and reporting to say, okay, if you're sitting there thinking, all right, sounds like we should be reporting, sounds like GRI is the framework that we should be using, what should we do? And the way I like to think about it is the first thing you should do is if you're doing a report now, you should do a gap analysis, which is how does your current report compare to the requirements of G4? You have to know where you stand. That's what a gap analysis is. The second thing I would do is competitor benchmarking. And I would look around at my competitors and see if any of those companies have issued sustainability reports. How did my report stack up against the competition? And even companies that are not issuing reports, a lot of times on their website, there's sustainability information. So you can get a sense of how your sustainability disclosures that you may or may not be making on your own website stacks up against your competitors. And the final point of materiality assessment. This is where you would sit down and look at the encyclopedia of issues that GRI has developed, these material issues, and look at those issues, there's 43 of them, and say, which of these issues actually are relevant to my company? So that's the three-step approach when you're getting ready to get into reporting in a more serious way.
So a little bit more of a background now on the GRI UFI reporting template. I think that we've made the case this morning that there are multiple internal and external benefits to reporting on sustainability despite the challenges. And we've taken the time working with our UFI Sustainability Committee to go through all of the indicators and select those that are the ones that we feel as a committee are most relevant and put those into a template, which is an Excel-based template that will make it much easier for you to complete this process. Otherwise, we would think that the GRI reporting process is very complex. If you download all the indicators and try to read through those to see which ones you should report on, you'll find it to be very complex. So we've simplified that for you, and I think that you'll see that as you go through. Now, this was developed with the UFI Sustainability Committee. 3.1 was with positive impact, and we joined to produce 4.0. And our committee has representatives from ADNEC, from ALMA, of course with BPA, the Direct Energy Center in Toronto, Reed Exhibitions, UBM, and of course Positive Impact. The description of this template identifies the recommended indicators to use in each segment of the industry. So we specifically speak to the venue, the organizer, and the service provider. And we've given you 10 indicators which appear as a top priority for all three segments, and that UFI recommends that the exhibition industry report as a minimum. This free template, initially developed, as we say, on the basis of 3.1, is now available to you under the new released G4. And you can find that at the UFI website, ufi.org.susdev for sustainable development. Now what I'd like to do is turn over to Karl, and he'll actually take you through the template as we load that up and share with you.
I'm going to go up to the share file and hit part 2B. That's the one I'm going to be looking at. So all of you should have this part 2 slide deck up there, and it says template for sustainability reporting within the exhibition industry. That's the one I'm going to go through next. Now, Glenn mentioned 3.1 and 4. 3.1 is still valid. Companies can report on that up to the end of next year. But we are really urging people to move to 4 because I think in many ways 4 is simpler than 3.1. And so what we want to try to do is, in this part of the presentation, take you through this actual template. And this is where we get into more of the details of how you use the template and how you report using GRI G4. I'm going to scroll down a bit here. And the point I want to make here, you'll see a little part of this thing called Overview of GRI Reporting. And there are really 3 things I want you to think about here about GRI reporting. 3 types of information that GRI wants you to report on. Again, we've talked about a few of those a little bit earlier, but the first one is general standard disclosures. Basic information about the company. This is information that GRI requires. Specific standard disclosures are performance metrics. You have to provide that information. You also have to disclose how you're managing sustainability. So in any GRI report, GRI is looking for those three things. We mentioned that the Event Organizer Sector Supplement came out a few years ago. You'll be looking at that. Now, here's a point I'd like to make. GRI disclosures are organized around aspects. Aspects is just another word for sustainability issues or topics. And if you wouldn't have had all this work done by this UFI committee, and you were sitting down to do a GRI report, the first thing you would probably do is you'd look at all of these GRI aspects. There are 40-some of them, 43 or 46, I believe. You'd look at those and you try to figure out which ones are right for my organization. And that's kind of getting this sense of identifying what's material for your organization. And you have to keep in mind that what's material for one organization may be different for another organization, even within the event industry. So materiality is very much focused on what's material for your organization. Okay, move down to the next part of this deck, and you'll see something up there about there are two levels of reporting, core and comprehensive. We are recommending that UFI organizations report at the core level, which is the first level of reporting. The requirements are fewer in number, and it's just plainly easier. So we go with core first, and then down the road, companies may choose to migrate to comprehensive. So think about GRI G4 core. That's what we're doing. So now the question becomes, well, what's involved in doing a GRI G4 report at the core level? And that goes back to those numbers I mentioned earlier, the 34, 15, and 8. This is what you have to do. GRI says there are 34 general standard disclosures that you have to report on at the core level. So there's 50, I believe 58 of them. And GRI says there are 34 that you have to do. So I'm going to go down here and just back up here for a second here. So before I do that, 15 specific disclosures. You'll have to provide the performance metrics around those things. You'll have to provide 8 disclosures on your management approach to your sustainability issues. Now, what UFI has done is that UFI has done a lot of the hard work. UFI has looked at, there were 91 actual metrics, specific standard disclosures in the GRI G4 template. And so the UFI committee looked at those, and they narrowed it down to a preliminary list of 50-some. And then they said, all right, this is where we're going to start, but the next thing we really need to do is to understand that depending on the type of UFI member, those issues may be different. So UFI looked at that and said, all right, let's identify the most important issues that we think for venues, for organizers, and for service providers. So they've done a lot of the hard work of focusing the report down to those issues that are most important. I'm just going to move along here now, because I want to get into, I want to show you this slide here. The slide I'm looking at now is a slide that talks about GRI aspects. And this is an interesting slide because this is this encyclopedia, if you will, of what GRI thinks are the sustainability issues for most companies. And you see what they've done here. They've organized them in categories: economic, environmental, and social. And then they've further broken down social into subcategories: labor practices and decent work, human rights, society, and product responsibility. So when most people think of sustainability, they think about these 3 major categories of environmental, economic, and social. What GRI does then has expanded that a bit, so they ended up with 6 categories. But then what they've done is they've taken all of these issues and they've organized these issues under these various categories. So if you look at these issues, you will see that this is the GRI's assessment of what they thought the most prevalent sustainability issues were for most companies. And what UFI has done has looked at this list and has begun to narrow this list down so that you don't have to do that work. But this is what most companies would have to do when they're doing GRI reporting. They'd be looking at this list of UFI, of GRI issues and narrowing it down for their company to focus on the ones that are most material. I'm going to page down a little bit more. All right, and we're coming to a section here now about the management approach. I've mentioned this a couple times before, but I just want to kind of get you into the flow of this to think that reporting is not just about identifying those aspects and putting performance metrics out. You also have to provide information about how you're managing those sustainability issues. That's what's the most important thing. Okay, moving along now. Now we're going to kind of really focus in on the specifics of the report, how you would do the report. I mentioned those three types of disclosures that GRI is looking for. The first one being the general standard disclosures. That's kind of the name, rank, and serial information number about your company. So what this slide does, and you'll see this on the template, this shows you all of the information that you need to report for a GRI core. I'm going to go down here to strategy and analysis, G4.1, a statement from the senior decision maker. So what the template shows you, it shows you the actual disclosure and then gives you a description of the disclosure. And then in the template itself, if you go into the green box that you're seeing, a help box pops up with some more information about how you complete this particular criteria. So this section here represents the first chunk of the report, which is the basic information about your company. And I'm going to just slowly scan through this so you get a sense of what GRI is looking for here. And as I mentioned earlier, most of this information, I'm sure you already have or would not take too long to get. A statement from the senior decision maker, your CEO, the name of your company, what do you do, which is G4.4, where are you located, G4.5. Keeping on that theme, operating countries, areas of major operation, G4.7, nature of ownership and legal form, G4.8, markets served, types of customers, G4.9, size and scale of the organization. Now, I'll just kind of linger here on G4.9 because what you'll see here is that a lot of GRI indicators will have a lot of components. So if you look at this one, what's hidden under size and scale of the organization is a lot of information that GRI is looking for. So GRI always asks for a lot. Not every reporter discloses every single thing that GRI is asking for. There's no policing factor here. You're not going to get slapped on the wrist if GRI is looking for 9 things and you provide 3 or 4. GRI is trying to give you this kind of comprehensive nature of what they'd like to see, but at the end of the day, it's up to you to what you want to report. So that's an example of an indicator that has a lot of subcomponents. Look at G4.10, size of the workforce, a lot of stuff there as well. G4.11, collective bargaining. 12, supply chain. Significant changes to your organization in the past year. Precautionary approach. This is one of those, it's a concept where they want you to report about issues that may happen to society or to the environment, and to see how your company is doing just to kind of keep ahead of the curve. So that's the precautionary approach. External initiatives, memberships. I'm scrolling down here, covered entities, report content, material aspect. Mention how important materiality is. This would be where you would begin to identify those topics that are most relevant to your organization. Aspect boundary, internal and external. This is an important concept here where GRI is saying that your sustainability impact is not limited to the legal boundaries of your organization. In fact, it can be broader than that. You could have maybe partial ownership interests in companies where it's not the majority ownership, but it's significant enough that you are actually having an impact. So one of the differences between G4 and 3.1 was G4 said, we want to move beyond this kind of narrow legalistic interpretation of where the boundary of an organization is. So GRI is saying in G4, think bigger. Think about all of your sustainability impacts, not just in the impacts of the legal entities of your organization, but bigger. So obviously, This is more of an issue for big companies, where they have, like mining companies, may have a 40% stake in a mine in Peru. There's a heck of a lot of environmental impacts in that 40%. And in the past, companies could avoid talking about that because they could say, well, we don't own that. It's just we got an interest in it. And GRI says, no, 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 you got to focus on that as well. So that's a little bit of background on what aspect and boundary means. Just as I cruise down here, you'll see restatements and significant changes. Pass over that here. I want to get to this category of stakeholder engagement. This is an important category because you go back to what I mentioned earlier, stakeholder engagement, this notion that you cannot truly be identifying your material issues unless you have engaged with your stakeholders, and not only identified who your stakeholders are, but actually have engaged with them to find out what their issues are, what their concerns are. So this section of the report really focuses on, have you identified your stakeholders? How do you engage with those stakeholders? What issues are you getting at from this process of engagement with your stakeholders? So this is an important section of the report, and this is what you'd be doing in that section. And then we get to the report profile. This is basic information about it. This is a report, is a financial year, calendar year, when's the last one you did, how often you're going to do a sustainability report, who's the key person we should talk to responsible for the report. The level, we're recommending GRI core, so you'd say it's a core report. External assurance, this is where you indicate whether the report has been assured, and if so, what parts of the report have been assured. Finally, we come to a section here on governance and ethics, and this is where GRI is looking for you to put some information about how is the firm structured, is there a board, what type of process is there for the board to be informed about significant sustainability issues. So you have governance, you have ethics and integrity. So as you'll see there, the number 56, there are a total of 56 disclosures, but for a GRI G4 core, there's only 34. I mean, 34 is still a lot of work, but the reason why I want to go through that list is I think for most of those disclosures, you have that information pretty close to hand, and the information that you don't, it should not be all that difficult to complete what GRI is looking for in a core report. So again, three big chunks of the report. This is the first chunk where you're talking about your company, and you're introducing the company to the world. Think about it that way, and this is what GRI is requiring for that. So that's that first section, okay? Now, moving down a little bit, we'll go into one of the next categories. Remember that slide a few bits ago where we talked about how GRI has organized these issues in these various categories? Well, one of the sectors is the environmental section. And that's what you'll see here on the slide. It says environment indicators. And what you'll see here on this slide is you'll see the indicators that are in this section on the environment. You see G4EN3, energy consumption. And I'll just scroll down a bit here onto the next page as well. So I have 2 pages here where it shows you all of the indicators. Now the indicators are the key performance metrics that GRI wants you to report on. What you see here in this slide is UFI has indicated, in its opinion, which of these indicators are of high priority or medium priority to the various segments of the membership. You'll see venue, organizer, and supplier. So if you look at energy, G4EN3, you'll see that UFI felt that this indicator was of high importance to venues, and not so much to organizers and suppliers. You go down a little bit here to water, you see here's another issue which is really important to the venue and of medium importance to the organizer and supplier. So what UFI is doing here is an attempt to make it easier for you to say, just focus on the things that are important, the ones that are marked H. If you want to report more than that, you're absolutely welcome to do so. But this was an attempt to simplify the GRI process because it can be pretty difficult. And so on this section here of environmental, you'll see all of the indicators that UFI felt were important with an indication of which of the indicators were of high importance to some segments, which indicators were of medium importance. So every one of these indicators made it past that initial cut, and they're things that you need to take a look at. As I just scroll down here, you'll see every one of these indicators has a breakdown by the three segments of medium or high, or if it's not marked, obviously it was considered low. So this is the first category of environment. And moving down a little bit further, I'm going to come to the next section here, which is society. The same idea. All of the indicators you see here are the ones that made the UFI cut. All of those on the right-hand side will indicate whether it's high or medium. I'm not going to go through each particular indicator because we don't have the time for that, but I just wanted to cruise through each of these major segments. So as I go through it, you can get a sense of what the performance metric is, and to get a sense of UFI's feeling about whether it was a high importance or medium importance. And think about that in the context of your own organization to say, is this indicator of high importance to me or is it medium? Because what we really want you to do, for simplicity's sake, is just focus on the issues that are most important. Use the UFI breakdown as a guide, because it'll make it easier for you. So in this section of society, again, you see on one page there, it's about 5 or 6 indicators. And you can see that one indicator which was thought to be of high importance to everyone was creating an accessible event. That's the one with all the H's going across. All right, I'm moving down here. I'm probably on slide, actually I might say 15 on your screen, but it says here labor and decent work indicators. This is another one of the categories, and you see here that there are 3 indicators, and all of these indicators are viewed as not high. They're all viewed as of medium importance. When you look at this, you will make your own judgments about whether these issues are of high priority to you or not. Because if you think about what I said earlier about GRI, it's all about materiality. Look at these things, figure out whether these issues are of high priority to your organization. Moving down to human rights, another category, only 3 aspects here. None of these viewed as of high importance. Your organization may have a different point of view. Maybe you view forced or compulsory labor for whatever reason as a highly important issue to your organization, one that's relevant. If so, you would report on that. Moving down to another category, this is called product responsibility. There are 4 indicators here. You can see the first one, customer health and safety, is viewed as a high priority for everyone. What's interesting here, if you go down to food and beverage, you'll see that here's an indicator which, if you're a venue, the thought was it's of medium priority, but if you're the organizer and supplier, it's high. So this shows you that even within our world, some of these issues have more relevance and are more material to certain organizations than the other. Moving down to a category called economic indicators, and there are 2 indicators here. You'll see another one that's viewed as a high priority for everyone, which is the financial benefits from sustainability initiatives. Uniformly, that was viewed as a high priority. All right, I'm moving down to the next slide. It's called sourcing indicators. When I went through the indicators before, I said how GRI organized the 3 basic categories we think of: social, environment, and economic, and they broke them down into 6. Now, because there's a special supplement, a sector supplement for the event organizers, in that sector supplement, GRI identified 2 additional categories of sustainability. One is called sourcing, one is called legacy. So this is the first one, sourcing. And you see 2 specific indicators here, and all of these are viewed as of high importance. I'll go down to the next one here, legacy. Another issue that was identified as part of this event organizer sector supplement. There are 3 indicators here. all are viewed as highly important. So in this segment of the report, what I've gone through here is I've gone through all of the information about the performance indicators that you need to report on. And you've seen here how UFI has identified the ones that, in UFI's opinion, are of most importance to the members. But it's up to you to look at this to figure out what makes sense for you. And so 34.15.8, that's the thing that I was thinking about. And so when I think about this, I think, all right, I got to do 34 general disclosures. There's no leeway on that. That's what GRI is telling me I have to do. You've seen those. Now we go to the performance indicators. Out of that list of 91, UFI has identified, in this case, about 15 for each of the venues, organizers, and suppliers that are most relevant. The simplest way to do this, you could sit down to do a report and you could say, all right, I'm going to do all of the indicators that came out of the sector supplement. There are 13 there, plus 2 other environmental indicators that were viewed as uniformly important. And there's your 15 indicators. Now the only problem with that is that not all 13 of those event organizer sector supplement issues are relevant for the venue, for the organizer, for the supplier. So that's why UFI went to the trouble of breaking it down into these 3 categories. So the simplest way is to take all 13 EOSS indicators, add on these 2 environmental indicators, EN 23 and 27, that would get you your 15. If you do that, though, you're quickly going to realize that that's probably is not as precise as you like. And because UFI developed these priorities for you, my opinion would be, if you're a venue, report on the 15 indicators that UFI has indicated high. If you're a supplier, if you're an organizer, report on the 15 indicators that UFI has suggested. It would just make it easier for you. So we have about 10 minutes left here, and we have a little bit more to go. And what I'll pass this over to Glenn now. I have to get another file up here. But this was trying to give you a sense of the specifics of what you need to report on. So I will go to part 3 on the slide deck and turn it over to Glenn.
Thank you, Carl. Well, I hope you've had a chance now to have a better understanding of the GRI reporting. And as Carl was going through, I was struck by, you might not notice the coding structure that's used. And in each case, we use G4 for the G4 indicators, of course. But then the indicators are alphabetic. So EC is economic, EN is environmental, LA is labor, for example, and EO is for the event organizer sector supplement. And of course, the number that follows that is the actual indicator. So if you looked at all of the GRI, you will notice by the indicators that we've provided, the ones that are missing. As I say, we've gone through and tried to simplify this process for you by picking out those that are best. Now, what we'd like to do is talk a bit more about the eventual reporting and show you, or make available to you, I should say, 2 examples of how sustainability can be helpful, especially if you're very new to this and you'd like to see what an actual report looks like. We've got 2 award winners to show you. You might not know that the Sustainability Committee has an awards program for this topic, and we've had 2 best reporting on sustainable development. One is the Cape Town International Convention Center in South Africa, and the other is La Rural Previo Ferial de Buenos Aires from Argentina. And those reports can both be found on the UFI website. You'll see the link there, ufi.org/SUSDEV for sustainable development. I would encourage you to take the time to go to the UFI website and look at these reports, as it will help you put some scope behind what yours might eventually look like. Now let's scroll down and talk a bit about UFI webinars. This webinar is going to be available in the Education Center, where you are today, at this URL, together with the first 2 sustainability webinars hosted by our committee. One, Learn How to Implement Sustainability, which we put together back in May of 13 with Positive Impact and UFI. And the second one, How to Report on Your Sustainability Initiatives, again, June of 13, that time with Positive Impact and UFI. And then scrolling down, we can say, for more information on UFI actions in sustainable development, please go to that site. Or if you have questions, and we've not addressed those in our content today, you can reach out to Christian, who's our Secretary of the Sustainability Committee, and here is his email address, chris@ufi.org. Thank you for participating today, and if you have any questions, please let us know.